Take a look at the U.S. versus China, some of the recent economic data. It does look like the U.S. is faring better in this trade war than China, which maybe weakens China's hand. I don't know if you're a buyer of that thesis.
It's not so much that I'm a buyer of that thesis, but I'm in Joe's camp, which is, yes, you keep putting money to work here. And the reason you do is because there's a total lack of alternatives. So if I have clients who have money who need to be invested and I'm looking out 3, 5, 10 years for them, there's nothing else to buy. I can't buy bonds, the 10-year Treasury, and I'm not talking about buying 10-year Treasuries. I'm talking about buying bond indexes, which price off of that. But bond yields are too low. Preferreds are going to kind of give me nothing. Private equity, we've seen those valuations start to ratchet down. And so I look at my portfolio at the market, and then I take, yes, I'm with Joe on that I'm investing, and then I take John, and I say, yeah, but you know what? The companies are still expected to earn maybe like 8-10%, or grow earnings 8-10% next year. And that, I'm not sure, entirely hinges on trade. I think that they'll grow even if we stay in a status quo. I don't think we will, so maybe we get an extra kiss from that. But I'm investing, and I'm positive on corporate earnings growth for next year.
Where's the risk reward in the market right now, Steve Weiss? If we're about, 18 times on the S&P 500, what's the upside versus the downside?
I think it's pretty much in balance, actually, with possibly more to the downside depending upon events. So everybody comes on the show, and every market's the most hateable market, but everybody comes on the show and says, I don't really like it. Now everybody's raising their price targets. So you can't say euphoria is in here. But maybe we got another couple of percent through the year end. That's a lot for a month. It's a big seasonal trade. Let's leave China out of it for a second. But to your point about companies spending, earnings aren't looking great for next year. So many have called the bottom in earnings here and in Europe. If we don't get it, worse, if we get declining earnings next year, I think the market could suffer a little bit. But, if you go and look at the other periods, not just in market, but just in life, you're sitting at a craps table, Doc. You keep throwing dice. Can't lose. You're running so lucky. One time you lose. You show up for something, the market, say, wow, it's going to keep going up. It goes down. You don't know why it's going to go down at some point. That's why it goes down so much. So I think we're pretty much in balance in terms of the risk reward. But if I were to handicap the outcome, I, too, think there's going to be a deal with China because they've got to stop the outflow of supply chains that are going everywhere. South Korea, Vietnam, those will be the next trade issues as we move forward because Vietnam's got nothing to give us back. South Korea does, more factories here. But right now, I believe there's going to be a trade deal. If not, they'll kick it down the road. And the third factor is the market's somewhat desensitized to it. It's not really trading up on talk either way, right? So, but it will trade if we don't get a deal. You'll see a major decline.
Well, that's an interesting point because even in today's session, despite the positive headlines, not just from President Trump yesterday, but also from the Commerce Ministry in China, we're not doing anything here, Jenny. I mean, we are flat,
right. Well,
as flat can be.
Despite good economic numbers, too.
Yeah, too.
But the S&P's up, the Dow's flat.
I think you're right that we're desensitized to the trade war. So that's why I'm kind of leaving that out of the investment process. But I think where I'll pick a bone with you is on that we're at a craps table. This isn't a craps table. And investing is not a game.
No, I'm not saying it's a craps table. I'm saying that
I hear you.
That it's a momentum market, pure and simple. There's no reason for Apple to have done what it did when earnings were down, revenues were down. It's up 60%.
It's a momentum market in the short term, right? And so if you're in it for a day or a week and you're playing and you're trading, then you're right. Maybe you get a crappy hand one time. Maybe you have a bad roll of the dice one time. But if you're, and by the way, also, I disagree that earnings may slow. I think earnings will actually come in pretty solidly.
We just don't know.
We don't know. But
what's your basis for that?
The basis is strong consumer, global growth acceleration.
We had a strong consumer this year.
And earnings grew this year.
Earnings grew.
But I'm just saying,
earnings declined.
I hate analogies that make the market like a craps table where you're just playing.
I didn't mean to offend you.
Okay, so, but I just think it's important to remember it's not a game, and if you are in it for the long time, you're not just going to get a random bad hand. And if the market does give you a random bad hand, it doesn't last that long. So you stick with it and you come out well on the other side.